Hi traders, welcome to the tradingmentors.com. Hope you're having a wonderful day. I put together this video to help everybody who wants to trade just working 15 minutes per day on a strategy that works based upon market structure and trend continuation patterns. You don't need the advanced pro charts, but if you have them, you'll be recognizing some of these special tools that we do use on the advanced pro charts. But here's the strategy that I use. I'm going to do a coaching session which covers all the tools that we're actually going to use today in this video. So enjoy, put your feet up, grab a cup of coffee, and let's get started. So the tools that I've got on the charts today is the 200-day moving average, EMA, this white line here. And I have a super trend here. Now you can use any super trend that you wish. Just go into indicators and type in super trend, and you can choose the top one. It's fine, the most popular one by Kivanch, whatever that says. And we do use special settings in the advanced pro charts, but just ignore that for the moment. The other thing we use here is the MACD, moving average convergence divergence. Just go into MACD. You may have seen this before, but this strategy is slightly different and a technique which you might not have seen before. So just go into moving average convergence divergence, this one here. The standard settings are fine. So let me just talk about the moving average convergence divergence. This is really important because if you don't understand this tool, then it's a good idea to understand it. And also a good idea to see how it works with this particular strategy if you just want to work 15 minutes a day. As many of my clients say, I just don't have time to be at the charts at the time of the entry. I don't have time because I've got to go to work. I don't have time because I've got to look after the kids. You know, life goes on, and I get it. I don't want to be at the charts either. I'm not at the charts very often, to be fair. But so this is one strategy you can pick up straight away. You can work on tomorrow. So let's do the settings. So the first thing to understand is that, let's make sure I've got the right color. That's not the right color. Let's go yellow. So the strategy, first of all, is you have these signal lines here, the blue line and the red line. So whenever the blue line and the red line move above the waterline, the watermark, the 0 line, as it's known, then we can think that the strategy is going long. Okay, and whenever the signal lines are below the waterline, we can think that the price is going to go down. That's the strategy. Okay, so that's the first thing. The other thing that we look out for is divergence within the market to make better decisions. So whenever you see the price moving down and the MACD signal line moving up, then that's a strategy. It's a different kind of strategy for actually buying at that point, but that's not about this video. This is about continuation patterns within the trend. So it gives you better positions. So that's something that you would need to understand, and it's something that we look out for in this strategy. The other thing that we see here is the histogram going green and then going red. So this is really, really important, and as part of this strategy is vital. So let's get a little bit more detailed. The other tool we have here is the stochastic, which is a standard stochastic 14, 3 and 3. Very simple to use indeed. So let's deal with shorts first of all. And now this is how your chart should look. You won't have these tools here. These are part of the advanced pro charts, advanced pro charts, advanced pro charts, advanced pro charts, advanced pro charts. So don't worry about those for the moment, because you can use this system without them. As I mentioned, you don't have to invest in that, but if you want to, you can, of course. All links are below. And if you want to become a member of my VIP room and Telegram, then please do. I'll give you daily updates every day on what's going on in the markets. So here's the strategy for the shorts. Let's get rid of some of this, and I will actually go into the position where you want to get entering the position, where you place your stop losses, and where you place your targets. And I'll give you several examples throughout this video so that you get used to what you're looking for. Now, once you have these settings, and by now hopefully you've uploaded these and are trying it, then of course let me know give me some feedback on how you're doing and how you're profiting from this system. So let's get to it. So in a short position, number one rule is the price has to be below the 200-day moving average. This is where it goes below, and it stays below, stays below, stays below, stays below. So they are the trading opportunities to the downside. That's the first thing. The other thing that you're looking for in this downtrend, you're looking for pullbacks in the market to get a better entry, so you get a better price in the price cycle, as we call it, and so therefore you're likely to get a much bigger move into profits much better and quicker. So let's deal with that first of all. So the other rule that we insist on is the fact that the signal line is below the MACD waterline. So this is sunk below there. You see that there? And it stayed below. Very, very important. Let me enlarge this for you. Now, what you're looking for during this correction, as it's known, is you're looking for the green histogram. When you see a green histogram into that session, by the way, this is a daily chart, very, very slow, and that's the whole point. You don't need to be at your chart all day long at all. And if you want me to send you a signal based upon this, then just join the signal room. It's 50 quid a month. You'll easily make that each month. So the rules are in play. Okay, so just a reminder, below the 200-day moving average, into a downtrend indicated by the super trend, all red is sell, all green is buy. Remember that across the board at thetradingmentors.com. And what you're looking for is this green histogram to go green, and that's your trading opportunity potentially. Okay, I say potentially because I'm going to cover why it's valid and why it's not valid. Okay, so let's have a look at this short position up here at 108.94. Zooming in slightly. Let's get rid of the MACD now, because we know the MACD is below the signal line. Okay, we know it's in a downtrend as indicated by all other tools. So we can actually minimize that, and then we can concentrate on the entry points using the oscillator. So now we've got the oscillator in play. We know that we're expecting the price to come down at any point here. And so therefore what we're looking for is a rejection on the 200-day moving average in this instance. So rejection is good, and you get a big fat sell signal in the Advanced Pro charts, which is fantastic. Now, if you don't have the Advanced Pro charts, you won't get the short position, but you will get the red Heikin-Ashi candles. We're using Heikin-Ashi candles in this instance, well, across the board actually. So let's zoom in a little bit, and then we can see the entry and the stop loss and the target. So as the price moves down and goes red, then you are looking for an entry at any point there. And so what you want to be doing is working out where the stop should be. So all you do is you just see, let me do a vertical line here, you see that line there on the oscillator, and you want to make sure that the stop loss is at the previous swing high. You can see it visually, but if we grab the tool there, short, and anywhere around there, so we go on the next candle, anywhere there. So we want to make sure that the stop loss is above the swing high and above that there. Okay, so 100 pips there. So once we've got that position in, we can say, yes, okay, if the price is going to bounce and go change direction, that's fine. However, we can see that the oscillator is crossing down as well. And really importantly, it's not oversold. So we can actually go 2 times quite easily, 200 pips. In actual fact, it went a lot more, 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 a lot more. Went over 400 pips in this instance. But you want to have a trading rule that fits your kind of style, and to ensure that you are going to be successful not just in one trade but in all trades. Some trades won't work, of course, that's the nature of the beast. However, you want to really go for 2 times or even 3 times if you feel brave enough. And 2 times is fine. You could even go 1.5 if you really want to test the system. However, you will miss out on a few hundred pips each time, so just be aware of that. So 2 times is quite reasonable. So that will give you 300 pips in that instance if you go 3 times. So let's look at another short setup on this system, making sure that you understand the strategy even if you don't have the advanced pro charts. And this is just 15 minutes a day. So back to the next step, we need the MACD to show up. Whoops, that's another tool. And so we remember the rules. The rules are on the next trade, let's get rid of that. On the next trade, we are looking for the same rules to apply in this position. We're looking for a correction, so we are looking for the histogram on the MACD to go green. Well, this is a corrective move because the price is below the 200 moving average. It's still in a downtrend as indicated here, and the signal line is still below the water line. And by the way, in this previous move here, if we look at the MACD signal line, let's grab that, there it is. We can see that the previous move was achieving lower lows on the signal line and lower lows on the price action. Good so far? And so therefore we can expect the continuation of that pattern, okay, because of this. All right, so this next trade is still valid. So we know that the histogram is gone green, so we can get rid of that now. We don't need that. You could keep it up there if you wanted to. Get rid of my head, and we can see now that we're waiting for the next move. So this here is you're looking for the oscillator to cross down here, and what you want to be doing is seeing the price go red as it crosses down somewhere around there, and you want to make sure that your stop is above the swing high, okay, at this point here. So let me draw a line to get a better understanding. So there is the highest point of the oscillator, see that there? So you want to make sure your stop is above that area there. So you could actually bring it down to the previous day's swing high, to that point there. Okay, so 80 pip stop. So in this instance, what should we go for? 2 to 1? 3 to 1? 3 to 1 is good, isn't it? Or you can take it to the previous swing low, which makes sense, 2.46 risk to reward. And these are not small numbers, guys. These are big numbers, 198 pips. So you're talking about a possibility of 304 pips, 198 pips. Very, very important. Again, it's good to validate these things so that you can understand what shorts are, what they look like, where your stops are, where your targets are. Targets are a little bit subjective, I agree, because markets are not always moving 200 or 300 or 400 pips. However, in the early stages of that move, you can see that the price was close to the 200-day moving average, so that indicates that the price is highly likely to have a big move. The further it gets away from the 200-day moving average, the chances are there's going to be a pullback and even a change of character. So let's have a look at the next move here, next short here, and see if this is validated and why it might not be. Bit of a clue. So again, we need the not that one. That's the advanced pro charts. Let's get the MACD. So in this instance here, well, the first thing that I notice on the advanced pro charts is these lines here. This is a bit of a clue on the advanced pro charts, but don't worry about that. You still have the chance to actually understand why this is possibly not a position to get into. So one thing here, at this short entry here, you can see that it is valid in terms of a few things. It is valid below the 200-day moving average, still holding on to the super trend, and the histogram is green, so you are looking for a short. However, we do have the price moving down on the previous move, and we have the signal line moving up. This is called positive divergence. You don't want to be trading long in a positive divergence environment. So this trade is not valid. This is really, really important, because if you see that there is divergence in the market, daily chart, remember, very, very slow, then you don't want to be getting in at all. It's highly likely to be a change of character. So that's the short entries explained and the rules given. Now let's have a look at long entries so that you get a better opportunity to get into the daily chart and just work 15 minutes a day. Now here's the change of character on the euro dollar on the daily chart. We can see that clearly. The super trend has gone green. The price has moved above the 200-day moving average, and all the Heikin Ashi charts have gone green as well. So in order to get a trade, we need the tools, we need the MACD, don't we? And we can see that the first thing we notice is that the signal lines have crossed up above the waterline, the 00 line as we call it. So the first thing we're looking for the histogram to go green this time, because it's in a uptrend. Green and green. Oh, sorry, no, the other way around. It's red and red. So you're looking for the histogram to go green, red within an uptrend, and red within an uptrend. You know the trend is up. You know the signal lines have moved above the 00 line. So market structure is to the upside, and we don't have any negative divergence. We have the signal lines moving up, and we have the price moving up with it. So there's no divergence in the market. So once we know that situation, what do? We know that we've got a red histogram in an uptrend. So the next thing we need to do is have a look at our oscillator. Okay, so once we know that, we then looking for a buy entry into the position, into the trade. And once you get the crossover on the oscillator, that is your position to go long. Excuse my voice, got a bit of a cold. As usual, having 6 grandchildren is one of the hazards. So again, what you want to be doing is seeing where the previous low was, swing low, and make sure that it is the very bottom of that last swing low on the oscillator. So we can draw a line again, can't we? So it's probably that one there. Needs to be a bit thinner, I think. that one there. So we can say that we want to be going at the previous swing low on that particular candle. Remember, this is a daily chart, it's not a 5-minute chart. So we can say that the previous swing low, let's zoom in a bit closer, shall we? Just to see that. So we can see that that is the swing low and that is the previous swing low there. So you've got a really nice stop there, 48 pips. If you get that position where you're in a fresh change of character and the prices continue, and then you can go, well, you can go whenever you like. It's a massive, massive move there. It went 672 pips maximum, but of course you've got to make your mind. Do you go 10 times? Do you go 5 times? Do you go 3 times? It is subjective. 3 times is fine. That still gives you 147 pips. So the same pattern and the same rules apply whether it's long or short. Okay, I'll give you some other examples. Here's another example on the Euro New Zealand, and you can see the trend. You can see where you might want to get in, and once you get used to this, you might not even feel you need the MACD. Some of the tools you can actually, once you've got experience and become more advanced, then of course you can remove a lot of these things and just trade without them. But nonetheless, if you're a beginner just starting out, then just practice. Use a demo account as well to get used to what you're looking at. So let's do the rules. Let's do the rules. So MACD. So we can see that the first thing we see, and to tick box the system, price is above the 200-day moving average, which is this white line. The signal lines are above the waterline, which indicates bullish behavior, or bullish confirmation and momentum. And then we're looking for, in a bullish trend, we are looking for the histogram to go red. And that might seem a bit odd, but just looking for the correction. All right, so they're the trading opportunities which we can cover now. So once you know that, you can then have your oscillator ready to go into the trade, and you can see the entry points. So in this instance here, we can see that the oscillator moves up, everything goes green, and the price moves up, and you can bank your position, swing high, 2 times. I need to zoom into that one a bit more, don't I? Let me just get rid of the MACD, so we know it's bullish. And this one, you may well have got stopped out of this early entry here, possibly. Yeah, actually, you probably would. But on the next entry here, you can see that the first thing is everything's gone green, and you've got the crossover of the oscillator as well. So the previous swing low on that oscillator is this here. And the previous swing low is there, actually right on that support line. So we can actually move that stop to the previous swing low about there, and then we can go for 2 times or 3 times. So 2.35 times is fine. If you're looking for targets, just look at the swing high from the previous high. There's usually some kind of resistance at that point. So a nice 360 pips potentially there. So again, MACD, the histogram goes red. If you can see that, that's the red there. And so therefore you're looking for an entry point. Actually, you've got divergence on the advanced pro charts there as well, automatically given to you. You can see that there as well. So the entry point there, here, Euro New Zealand, is there. See that pull up there? and therefore the price starts to make a move. And green Heikin-Ashi charts are really important. So green Heikin-Ashi charts are your buying opportunity, and the oscillator agrees with that position, and it indicates that there's going to highly likely going to be a very big move, because we've got divergence on the advanced pro charts, and we've got Heikin-Ashi gone green, and we've got the oscillator confirmed as well. On the advanced pro charts, we also have everything going green as well here. If you can see that there, that indicates that the prices are going to have a big move. So a very simple system. Once you get used to it, it's lovely. It's a beautiful thing, and it works really well on the high volume positions like euro dollar, pound, yen, those kind of trading pairs that actually work with very, very high volume. So if you have any questions, if you like what you see, click on the like. If you want to subscribe to the YouTube channel, please subscribe. I'll be doing lots of videos in the next few weeks, and give you some trading ideas whether you've got the advanced pro charts or not. Have a wonderful day.